Hello, friends. Today we are discussing the tracking of the contracts and divergence between the option contracts and how they can give you the direction and the bias. You have seen this trading uh, structure desktop earlier. So today we are just taking out SPX and we are bringing in EMD just to see the subtleties of the contract rotations. And it's all about contract rotations. And if you can master those contract tracing, there's quite an edge out there. Now, how is this constructed? It is constructed from the bars. Inside the bars, we look inside the bars. Inside the bars resides the profitable opportunities of tracking the buyers and sellers. So, as you master who controls the market at a given point, there's an entire uh, structure to be understood. This is part of your order flow. Once you know your levels, once you know the levels of rotation, it starts from the levels. Everything starts from the levels which we have been printing for a while. So once you have a level structure, now you have to figure out, will that level hold or fold? And that depends on what is going on inside the bar, the buyers and sellers, how they are interacting with each other. And now this is kind of ultimate trading. We need to know about it. And the reason for that is, if you're trading 1,000 shares of AMD or 10,000 shares of AMD, you need to minimize your risk to the highest possibility. That's the whole game, risk mitigation. So it all starts from the levels. Now this $1 move may not be much, but if you're doing day trading and you're a specialist, and all the professional friends, they specialize in one area and one stock, they're responsible of they're responsible for dealing with large portfolio of things, right? So the question is, why did it stop here? Now you may call this supply demand zones, you may call this the buyers came here, sellers came here. This is fine, but when I tell you to invest $5 million every time you trade in AMD, what are you going to do about it? The structure changes, right? I can see things you cannot see because I'm professionally trained, and I also am a developer of 100 plus algos in the professional arena. So I can see things you cannot see from naked eye. But the point I'm trying to make is these levels were already posted. So let's check those out. And let's check out the AMD. And let's blow it out. Right? So these levels are known. So you start with some level. So 81 in the morning when you published it, and 82.30 is a 30 cent, roughly 30 cent range. So let's say we are 82 and 82.30. Let's just, that is the reason I say plot this on your charts. So let's go with this philosophy. 81, let's do 82 and 82.30. So we create a block. 82 and 82.30. All right, so let's create it. And this is it. Let's create it like this. Okay. And now what we have a reference thing, right? So now we want to see which side is this going to flow. Is it going to go long or is it going to go short? Now this is a very high level information. Now we use VWAPs, which is little next level 2 information, where we say, okay, long-term multi-day and current VWAP is above this, so trend is up. And what you do is, and then we also look at the snaps, right? We already discussed it. How far off the mean are you going and snapping? So we create a snapper. A simple synthetic Poorman snapper is nothing better than having a trend line. Right here is a snapper. Rotate the snapper off this long-term view of average. Long-term view of average, right? You're getting a snap, you got a snap. You got a snap here, you got a snap here, right? And this is all coming from this impulse as right here, impulse. And then we trace this impulse on your multi-day VWAP, long-term moving average, I think is 200 and 160. And there we go, right? So we're getting snaps. We got 3 great snaps. So you always have to do some work, right? And there we go. So this snap finished at this green level. This snap finished at this green level between the 2 green levels, right? That's why we plot this fat green levels. And right here. Now, trend is up. Now, anti-trend also we need to see what is the average anti-trend. It could be 1 or 2 of these rollbacks. Now we have very sophisticated technology which I will show you as time progresses, because so these are snapbacks. These are snapbacks height, right? Now this is a snapback. Or it could be double of that, which is going to come down here if market really takes tumble. And if it does, you are at these 2 support levels where the market makers are driving their business. They drive the business from here, which you see after the fact in the TP prints. Either way, they all converge, right? So DPS gives you a lot more confidence, I guess, because it's a feeling. So this DP is on 85, and then also DP is here. CPs, calls and puts are there. Somebody has, I think on 80, they have long 15 million total net straddle or a strangle, one of these, if you look at the price. But either way, so this is where we are, right? So the question is, at this point, you have done your homework, you're looking at the snaps, and you feel like you need to go up because trend is up. Now we need some dig deeper evidence. We can also take this whole down. So multiple, we have already discussed this 9 times, right? So this one, there are probably 1 or 2 snaps going on. So you can look into all this, right? Okay. All right. So you got the idea. Now at this point, what we have to do is now going back to the main discussion. Once you master these ideas which have been established, and we have been giving this for almost more than 6 months, and you should be seeing it and trusting these something, things which will never change because they are driven by the big banks. So let me zoom in. And what we need to do is, once you master, as I said earlier, structure of the market is what we have been talking about, various structures before you can time the market, which we can time it. We have 50 plus tools to time the market, which is a big no-no in the industry because no one is supposed to do that, which we will talk about it someday. Maybe I'll just do a demo in the end quickly. But right now, first, let's finish the idea. Now, after you have been playing with the levels being posted, now you have to take your energy and your expertise to the next level. And I'm going through step 1.1 next, which is rotation, contract tracking, right? Where it is coming from is coming from these contracts, buyers and sellers. Who is in control? Now, once you get, now this is very difficult skill to master, but just practice. Nothing is difficult for human beings, right? So it's just spending the time, and following a structure of the big banks. They rule the market. So the rule here is pretty simple. You see this yellow boxes, yellow boxes, yellow boxes, yellow boxes. They are driving the value to the edge of each bar. This is your wicks inside the bar. Wicks inside the bar, wicks inside the bar. The value has been driven excruciatingly at the edge. These are all the sellers, like, hitting the bid, hitting the bid, hitting the bid, hitting the bid, hitting the bid. Now what has happened? Now you see here that the sellers are dissipating. 10,000, 5,000, 2,000, 1,500, they lost the power, right? While coming down, trying to crush down, this is 1 minute chart on a tick by tick manipulation. Kill, kill, kill. Look at this. All huge. This is completely like, there's no buyers that we found here. Somebody was found here, attempted to stop the market, because I think what happens in the falling market, the buys take place. And you can see, like, they're trying to get to the level, comfort zone, and try to see if they want to break out or hold. But here, the whole bar is sellers ruling the market. That's why the bar is red, obviously. But here in the end, you can see the loss of power. 10, 5, 2, 1. Okay, how about this guy? How about this guy? This guy, same thing, right? Let's look closely. Very, very important. Right here, what we have, my friends, 20,000, 5,000, 149, 15,000, 1,400, right? 40, 32, 6,000. If you look at, if there was a big sellers coming in, it will be a lot different than this loss of momentum. Loss of momentum, but all this is done at the area of interest. And the area of interest is known before the market open. We just need one new bar after the close for the day, and then we print these levels, right? So there we go. Now we can see the value of the entire market bar has been compressed to the edge of the bar. Edge in the end. Here is on the top. It's end, right? So that is, what is it doing us? Is giving us a lean area where we can lean against. And we can also look at other things, but this is what the point is. I hope that makes sense. So the sellers lost their power, and then the value was driven way. They tried very hard to drive the value down. Value is pinned at the bottom. Now this is our lean point, which basically means if you're buying stocks with 20 cents and looking for 1 to 5, 1 to 4, 1 to 3 profit loss, and this is where you go and get it. And after mastering only one thing at a time, and only one instrument mastery, you will understand the behavior of the buyers and sellers and the algos which are operating in this space. And then what you do is you lean against it, right? So this was the lean, and then it just took off from there. Now, there are a lot of concepts here. This is just the point I had to make before I take you to the visual synthetics of what's really going on, right? This is what you see. This is what goes on in the market. And then why did it stop here? That's the green level, right? So you already have that level too, already given in advance. So let's take this level of 80, what is this? 8560 area, right? So you plot this. So 8560 is right here. Now let's go and zoom into this area and see how the buyers and sellers were behaving here, right? So let's go and check. So now you want to take a shot. You need somebody. What has happened? The value should be on the top. Attempt to break, and they are not able to break. So the lean will be these value area inside the bar And what we need to see is what's going on. 20,000, 6,700, same pattern shows up, right? Loss of power. Same time, 2,000 contracts were initiated to go short. Now, this could be your squeeze going in, right? Somebody's trying to go and do a short. I'm not the only one who is aware of all these levels. So the big banks, they can see it, and they also know there are people who are going short, right? They can see the whole order flow on both sides. Being a specialist, what happens next? Algos knows that too. What happens next? So somebody is thinking about it will go up higher, but we know we are the green with 70% probability of reversal. Plus we have our impulse, manual impulses. Uh, and then what we do next, we find a bar which is jammed. Now you may have tried this one time and got stopped out, which is fine. And then you wait. This is our supply zone, right? This is our green bar. This is right here is a green bar. So when it gets close to it, I need to find evidence. Is it time to go short? And what is my lean? So I start looking in the bar, inside the bar, inside the bar, inside the bar. They attempted to go. Buyers were aggressive, maybe there are some stop losses. They are trying to rush it out, right? So they flushed all the stops, or they are trying to break out. We don't know, but we know that whatever was happening, the contracts dissipated. 30, 26, 700, and then there's on the bid side, the seller started an initiative move with 2,000 contracts. And then the lean comes, right? This is the lean. So if you're going to go short, now this is again, we're dealing with 5,000, 10,000 shares, right? And then we're going to go short. This is my lean, this is my stop loss. Now if you see this, so this is a 10-cent stop losses. This is how you need to build the level of accuracy, right? And then we go from there.
So now we know what's going on, and it takes quite a bit of practice, 6 months at least on each stack. So the poor man's attempt is right here to do the same thing. We took a special case of AMD today. Here we have 1 minute and 5 minute. I need to see the divergence between the contracts, and then I can make a bias. And not only the contract divergence on 1 and 5 minutes, and also the divergence between price and contract themselves. So the context is, so if you look at this on Tuesday, 1 o'clock, I think AMD was positioned, you can see at the, when my cursor is on the green background to go long, which is right here. And you got the 3-4 point rally overnight if you had a play to play with this. This area is of special interest, as you can see here. Now, if you see this guy at this location, observe this location where the price is, and look at here where the 1 minute contracts are. So 1 minute contracts are contracts which are not heavy contracts. They are like, shall I put it? Let's say contracts which are not large in volume. So compare here, people trading 100, 500 shares. Now here, as they accumulate over time, you start seeing the divergence, right? You can see here, there's no divergence, but there's a divergence right here. But look at on the price side. Price was here, and look at the contract. Contracts are retesting the level, and the price has gone up $1.50 at rejection level. But look at the contract on the 5 minutes, they're not following through. So this move is actually a fake move. And this 84.90 is also predicted upfront from yesterday. 84.90 somewhere here, right? The green level is here, green level is also there, the kind of a box. And also impulse move is also there. So this is how it's very difficult to look at 20 things in a given day. So you have to master one thing, and that's all you need actually. It will help you a lot to make a lot more money unless you are a premium collector. So I think you have to look at a few things to really, really go heavy eventually, right? Heavy means I'm talking about 100 contracts. That's the minimum heaviness you need to be at the professional level. All right, but you can get there. So I'm trying to structure your thought in the direction of how the professional training takes place and how the professional trade. Now, algos are doing all the professionalism. But you can see how the structures are laid out. So just to wrap it up for today, again, we have this wrap, and then is there any other pullback? The other next pullback came here around 1 o'clock for another leg up. So if you look at this, so now let's look at, because the contracts open a week early, right? So look at here, we're looking at a short area, right there, short area. Now we're looking at a context of here very quickly, the long. So in early morning, you can just get this ping one shot and you're done for the day, right? Rest of the indicator, they're nothing more than just pivots, right? You can get them all in the platform. So they are just free support resistance indicators here. This one is customized, the dot ones. Rest is all support and resistance. You can get any Pearson pivots or Camarilla pivots. They are mathematically stable. But this is just giving you the context of are we too high or too low. But the rotation only happens at these levels through this contract tracker. Now this is poor man's way of doing what is done professionally right here. So I hope this helps, and we will go from there. Order flow is the second phase of refining and qualifying your entries, which we are aware of, the levels. So this is how you look inside it. Now this oscillator may be the 300%, 400% better than anything you've seen in the world, but it is still an oscillator. This is all delayed information, right? Real time, what is happening inside the bar. Thank you very much. I hope it added some value. Just to look at these green levels, right? They will just go to these green levels. It could be, so we are looking for these green levels to show up. They drive from there and they come back from, when the panic hits, they come back home. This is the homecoming, right? This is right there. All these blue lines are, you leave your house, when you get scared, beat up, you just come back home. Right? Same thing when you're scared, try to explore the world, come back home. Explore the world, come back home, right? So they will jump from home to home to home. And these are the drivers from where the algos will drive their business. And then job becomes picking the direction, and that can be done in two ways. I showed you. It's impossible to do it. It can be only coached on these areas. We cannot really publicly put all those things, right? So I promised you one magic. Here's a magic. Now we know exactly what time. Now this is SPX, right? The big daddy of all things. Now you see this line starting here, ending here. They are fully automatically plotted. It will keep on plotting for rest of the life of any instrument where we put it on. At the beginning of this and the end of this are the turns in the market. So you can just see that turn here and the turn happen here. And then we go for this day, the turn happened here. See that in the bottom? Now these are 10-point moves. And then we have this is the end of the bottom. So this is connected, this point is connected to this high to this high. And then we had a reversal. We had two location areas where market is saying X is going to go back down. 10 points up, 10 points Now this is 10 point of SPX 70. Yeah, 10 points up, 10 points down, right? And this one, market was just sloppy, sloppy, it took off. Now what else is going on? So this line also right here, this line is coming and it is ending. You can't see is right here. I can just trust me on this one. So it starts here. They all equal length and they automatically adjust end every day by day based on the astrophysics models, right? Right here. It end comes here, boom, and took off. But what we also have is the squaring of time and price together. When the time and price comes together, market will change direction based on the laws of nature. And this circle is depicting just that. When you hit the edges of the circle, you will turn. So timer came, edge came, boom. That's what it booms automatically, right? Now this is very advanced level of very sophisticated models. Took years and years and years of research and building, right? Being a quant. So now you got the ideas where you can be in your trading path and journey. This level of accuracy is possible. So here we are. Now this is the ultimate time and price. There's also ultimate. There's also a price. Square has 4 sides. This is side number 2. This is side number 4. Now what does that mean? It just simply means as you now we're converting the square into a circle to see the cycles. Cycle, circles, same thing, right? And there's a formula to convert cycle into circle into square. That's all there is. Now let's move this here, right? So when we move it here, the market should react as it hits this second circle, which is a half the cycle. That's all. Oh, let me put it properly. It hit it, came down 20 points. So this is kind of a manual thing again. It's very difficult to put geometry, real life situation. Again, same thing. Market went up, boom, came down. Right? These are laws of nature. This is the next level of trading, which one has to get into. Now, if I put it on this top, you can see the half a square and the circle cycle out. Boom. And then eventually you just keep it here. The bigger circle came and it again moved up. So I took this trade. I was waiting for this, waiting for this, because I like to see the big moves personally, right? I'm not interested in pennies. So if you put it here, which I think, so this level of accuracy of time and price, you see here, this is the complete square, boom. Time is known right here. Time is known. And the squaring is known where the time and price merges. I think there's only one person in the world who can do this. And this is all coming through deep meditations, even though we are mathematical quants. But this is all natural sciences. To interact with the natural universe, you need natural meditations. So I'm going to release a meditation track soon. So hopefully everybody can get to this level. But this is where you can be, and you have to start from a very strong foundation. Thank you so much.